Nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Good morning, guys. Let's see what we have. Most likely not much has changed, so we'll update a few levels and see whether there's a local setup or whether we need to wait a bit longer, which is probably the case. Let's go through a few charts and repeat the key points. On the monthly time frame, price has hit the higher time frame levels. This area now decides whether we bounce from here, maybe range for some time first, and then bounce. Because as you can see, this is a clear higher time frame SR level. Losing this area would, in my view, be more or less the first time Bitcoin moves significantly below the previous all-time high. Don't get me wrong, a move lower is of course still possible, but in the best case, we would like to see this area holding, especially since it aligns with other metrics like the power law, which I already showed, and additional metrics I shared with you in Telegram. Based on history, price only retested the previous all-time high once. I showed that in yesterday's video. So here we can really only compare this situation to the last time and see how deep price went below the previous all-time high. Last time, it was around 20%. Based on that, and yes, I know the data sample is small, we can look at what that deviation would mean this time. That would put price around 54K. As said, this doesn't have to happen. This upper area can hold, maybe with wicks down, and still remain intact. But if it doesn't, then we would have another small confluence around the 50K area, because that is still a big level. There we would also have the power law floor. And again, it's not only the power law, there are multiple metrics there. One of the bottom metrics is still climbing and is currently around 47K, while the power law sits a bit higher. As it stands now, we have never seen the power law break down or up, as I showed yesterday. So the conclusion for me is simple. I first look for bottoms closer to the power law. Only if that fails would I start looking for lower levels. And if something completely new happens, then we adapt and adjust the plan. With that said, this was of course a level to take action. I had spot strategy fills there, and my normal spot hodl was also filled further. For now, I'm more or less waiting for the next spot action. That means I would like to see a range, and I want my stats to start showing some bottom signals. That's where I'd like to buy more, regardless of whether price is slightly higher or lower than here. The next step would then be to wait for confirmation, meaning once the trend shifts, that's where I would like to add more. So not fully aggressive at this point, but clearly good levels to buy for some spot exposure. At least for me, which is why I did it. As mentioned, a few rabbit box limits were filled as well. I have a few setups running, and on some of them, this move down resulted in averaging all the way down. I will only close those positions if they hit the target. No financial advice, of course. Now, the next chart shows the 202-day dominant cycle. This has been pretty accurate in the past, especially with the highs. The next date would be around March. It doesn't have to happen exactly on that date, but the midpoint is the reference. In this time window, we would like to see a bottom formation, a sideways move, some chop, or a bounce, assuming these levels hold. We don't know that yet, so for now, we trade the local levels. If we switch to the daily time frame and turn on the cycle indicator, we can see that it has started to flash a potential cycle low. For now, it says low, meaning low probability unless price moves higher. This daily cycle low is actually already overdue. I originally expected it to form higher inside the previous range, which would have matched perfectly. Weekly cycle low, then a longer range. That range wasn't really a big one, and historically smaller ranges tend to break to the upside. There was a lot of confluence for higher prices, especially since my stats did not show a top signal. But as we can see, the weekly cycle low was broken, the daily cycle extended, and we got a bigger move down. That's how it looks when these things fail. It's a good reminder that markets are living and changing, and we have to adapt to new situations while still following our plan. Whether a trade is a winner or a loser doesn't matter, as long as the plan makes more money over time. With that said, I will most likely do things very similarly to how I've done them in the past. But it's still a lesson for everyone, and for me as well. There are a few things I will probably manage differently next time, especially with some strategies where losses could become bigger. For now, we are looking for a bottom formation or a range, unless price breaks down again. If that happens, then logically we would look toward the next SR levels lower, which align with the power law floor, as you can see here. Yesterday, I showed you the metric. Now I'm showing it directly on the chart. So what I've marked out here are the drawdowns we had in all bear markets. I've often said that to define a bear market bottom, we first need to see a bull market top. The classic top is usually more parabolic and pushes price noticeably above the power law floor. When that happens, we then usually see a retracement back toward that power law floor area. Historically, that retracement has averaged around 85%, which would bring Bitcoin back to roughly 17K if history repeated exactly. If instead we look at the decreasing percentage drawdowns from cycle to cycle, the next expected drop would be around 72%, which would put Bitcoin around 34.7K. Then we have the power law floor, which is currently around 52K and rising. That means the more time passes, the higher this floor moves. I marked this out here with the lines. This time, however, we didn't have that big parabolic rise. Instead, price already came relatively close to the power law floor based on this metric. Of course, these areas often align with Fibonacci retracements as well, around the 60 to 70% retracement zones. If we look at past tops and bottoms and measure the moves, we can see price repeatedly retracing into these fib areas. Even without the fibs, you can see that these moves tend to cluster in similar zones. So normally, we would see a big rise and then a big retracement, around 85% on average, or around 72% if we follow the decreasing drawdown trend. Based on that logic, I also marked where price would roughly need to go if we had a classic top this cycle. That would put price somewhere around 260K. Again, that's not my personal wish. This is purely what the chart would imply. If price then retraced around 72% from that level, the cycle low would land around 72K, likely toward the end of 2026. That would be the classic scenario, a big rise, followed by a retracement into an area where fibs and metrics align, and then a cycle low forms there. But since we didn't have a classic top this time, the situation is different. The average bear market drawdown now sits far below the metric lows at around 17Ks. And even the mid-case scenario around 34K is also below the current metrics. Of course, anything can happen. Metrics can break, and people can speculate on that. But for me, it makes more sense to focus on what is realistic now. The key point is, the bottom is much closer than it usually is. The metrics and the historical averages are far apart. So unless the power law metric breaks, which it never has in Bitcoin's full history, I have to consider the scenario that this cycle's bottom forms earlier and higher than usual. Again, I can be wrong. This is not financial advice. But that's the logic I'm using when I look at these charts. And if you think the same way, don't judge me if it ends up breaking down. This is all about probabilities, not certainties. Because price is already close to the lower part of the metric, I have to ask myself, what if they formed the low earlier this time? We didn't get a classic top, so why should we expect a classic bottom? Maybe this next cycle looks different. Maybe we get a longer range and then much higher prices later. Or maybe, as a surprise, the metric actually breaks. The local idea I'm working with is this. The floor is rising, and market participants don't want to buy later at much higher floor prices, so they accumulate earlier, while price is still relatively low. That would mean we form a bottom earlier, then range or grind around this metric area, and near the 4-year cycle low, we simply get a higher low. That would catch a lot of people off guard. Of course, another scenario is that price makes a new high from here and still comes back later into the 4-year cycle low around these same price areas. There are many ways price can move, up, down, sideways around this metric. The main thing is simple. We still need to see this area hold. If a metric that has never been broken in Bitcoin's entire history suddenly breaks, that would not be a good sign for the longer-term outlook. But I can't assume that unless it actually happens. So to summarize, we didn't have a classic top, neither by this chart nor by other metrics and signals I've shown. Because of that, I'm open to the idea that this bottom could be different. I'm fully ready to be proven wrong. But for now, I think that if we form a bottom here, move higher, or chop around for some time, the next low could very well be a higher low, which would surprise a lot of people. This is not financial advice, but historically, this is a good area to accumulate Bitcoin, as long as you do your own research and only invest in what you believe in, not what someone else says. For me, I'm in patience mode. I'm waiting for a bottom to form in this area. In the meantime, I've made a few spot buys for long-term holding and continued spot trades using the rabbit box strategy. When I start to see more bottom signals, I'll look to accumulate more. And only once we see a confirmed trend reversal will I add more aggressively. That way, I don't need to catch the exact bottom. The goal is to build a good average around it. With that said, we'll switch to some other charts. I'll update the yearly price time chart and the local levels with some chill music in the extended version for Patreons. For the public video, that's it. I'm still in patience mode, trading the local range, ready for something new in the near future, slowly but surely buying spot. And once we get more confirmation, I'll increase exposure. That's not financial advice. I wish you a nice day, and I'll see you in the next one.